veins, I've been driving this train, years in this lane. There's no stopping this flame, cause I came to the game and I changed it to play how I like, rearranged it to my own domain. Yeah, I got what it takes, made lots of mistakes, taking shots, skipping breaks, feeling lost, feeling great, popping off, singing straight, never stopped, never changed. All the squad here to play, and I've got something to say, yeah. I work hard each and every day, I get lost in the words I say. I don't push pause, no I push play. I won't stop till I make a change. I withdraw on the things I make. I turn flaws into flawless traits. I build tall, never capped in space. I won't stop till I hear him say, oh, oh, la, 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 la. And I'm up again. I got tired eyes, need a cup of blend. That's right, in the AM, that's my only friend. No light, just the sun come.
All right. I am Dr. Imfan Akpan, and we had a scheduled interview with Mr. Gael Gadah from Moani, which is a very interesting platform. He's been here several times to discuss cryptocurrency, the metaverse, NFTs, lending. So you think about cryptocurrency and various types of lending. He's been here with us, but he's not with us today. So I wanted to kind of still keep the show going, because I know that we had this invite up here for a while. So let me just, I'll pull up a previous interview, which is pretty neat for me to do. Hold on. We can kind of, this was in 2. Let me see if I can find it, where we talked about DeFi, which I think is huge. Let's see. Here we go. So let's look at this. Hold on 1 second. I am a professor of accounting. Officer who is here. First CEO I've had to come on the live stream, so that is very impressive and exciting. Mr. Gael Gadah, who's the CEO of well, I'll let him tell you, if you mind introducing yourself.
Yes, of course. And thank you so much, Professor, for having me today. It is such a blessing, it's such a pleasure to be here today. And of course, I'm the founder and CEO of Moani, which is an upcoming digital bank, bringing to market what we are calling DeFi banking. And CEO at this very time for us means Chief Everything Officer. So of course, I'm the Chief Everything Officer of Moani, that digital bank that's coming to marketplace. Yeah.
That is great, and that is amazing. And can you talk a little bit about Moani and DeFi?
Yes, so that's a very good point. Probably I can start with DeFi and then chime into what Mawoni is. What is DeFi? DeFi, that is decentralized finance. Decentralized finance. And the best way to picture decentralized finance is to think about finance in general. So the financial services industry is a very centralized industry where there is a middleman for almost everything. When you think about banking, what do banks do? They take your savings and use those savings to give loans or credit cards to people or businesses. So they are the middlemen taking your savings and then using it, to give loans and credit cards to other people. What do investment firms do? They take your investment and use that money to invest in opportunity, be it projects, businesses, and so far and so forth. What do brokers do? They are in between your money, your investment, and whatever investment you want to put that money in. So the financial services industry, as a general rule, is full of middlemen. And what decentralized finance is doing is cutting all those middlemen out. It's pretty much saying, well, now you use your own savings to invest in that company. You use your own savings to give that loan or that credit cards to this or that person, that business. That's what decentralized finance is. Decentralized finance is, in other terms, finance without the middleman.
Mm. So how did you get involved in DeFi and what is the problem that you're looking to solve?
That's good. That's a very great question. Probably I can start with what's the problem we are looking to solve, and then I can tell later how did I get involved in this whole environment venture. The problem we are solving is pretty much simply access to credit. Access to credit, the ability of people to get loans or credit cards in the banking system. Access to credit. And in the US alone today, there are 100 million people who don't have access to credit. That means if you take two working adults, one of them cannot walk into a bank and get a loan or a credit card. That is what's happening today. That is the status quo today. Now, it doesn't mean all those 100 million people are bad at managing their money. The truth is, for half of those people, credit bureaus, Experian, and others were just not able to assign a credit score. They have no credit score, therefore they cannot get a loan at Chase Bank. Therefore, they cannot get a loan at Key Bank in the banking system generally. And so that's where we come in. To help, we are building a digital bank to allow access to credit to all those 100 million people, regardless of their credit score and regardless of their income level. And how are we doing that? Of course, through DeFi banking. And the way it works is, instead of being a traditional bank that takes your savings and use those savings to give loans or credit cards to people you don't know, but that they think are credit worthy, we go a different route. We don't take your savings. We instead allow you, or individual and businesses, to save together. We allow individual and businesses to give loans and even credit cards to one another. And of course, we allow individuals and businesses to invest in one another. And that's a banking system without any middlemen, where individual and businesses are doing all the financial transactions, savings, lending, or borrowing, and investing without any middlemen, straight in a P2P manner. And that is what we are building, a fully decentralized banking for everyone. So that's the problem that we are solving, and that's how we are solving it through DeFi banking.
Well, would you consider your target market to be high risk? High risk in the sense that they don't have credit, right? So there's no history, not saying in a bad sense, because they don't have it, but we don't know, there's no history. So is this considered risky?
That's a very good question, and happy to address that question. And of course, I did not answer the other question, which is how did I get involved? How did I get involved into all this, right? But
Right.
let's start with this question first, which is, who are we serving? This is a digital bank for everyone and anyone. The other way to think about it, we can answer this question in two ways, or from two standpoints. The first one is those 100 million people who don't have access to credit. Who are there? Are they necessarily low income individuals, all of them? Are they necessarily people who are probably experiencing some financial hardship? No, not necessarily. The data are saying that most of the people who don't have a credit score are actually middle income people, middle income individuals. And there are more high income individuals that don't have a credit score than there are low income individuals that don't have a credit score. Yes. So who are we serving? Everyone, not only low income individuals, but every single one, not only high income individuals, but every single one. Because
why?
Because rich and poor, everyone is impacted by this issue.
Wow. I know you're going to answer that other question, but I just wanted to follow up. Why high income individuals?
I can give you an example, and probably that leads into the other question, which is how do we get started with this, right?
Yeah.
You take my own example. I'm an immigrant in the US, right? I came into the US a few years ago, right? And every single immigrant in the US, and there are 45 million first generation immigrant in the US today. And every single one of them in their first 3 years, in their first 5 years, they didn't have a good credit score. Not because they are bad at managing their money, but because they don't have a credit history in the US. So automatically in their first 3 years, they don't have a credit score at all, or if they happen to have a credit score, it has to be a low credit score because they don't have a credit history. One of the criteria of deciding or computing a credit score includes your credit history. So if you don't have a credit history in the US, you don't have a good credit score automatically. That happened to me in my first years in the US, and when I was getting my first car loan, that was a very high interest rate car loan. Why? I had a good job, a good pay, but I was fairly new in the country, didn't have enough credit history, so automatically my credit score was low, and so automatically you have a small credit score, a low credit score, you have a high interest loan if you happen to find one. And that was a problem, an issue that many of my people in my community were facing. I myself faced it. Many people that I know faced it. And it's not only a problem that I or people from my community are facing. Every single immigrant in the US is facing the same problem, at least in their first years in the US. If you are 20 years old or in your early 20s, you are also probably facing the same issue, because you haven't built your credit history yet, right? So it's not a problem just for high-income individuals or low-income individuals. It's a problem affecting anyone. And that's the very problem that drove me to get on this journey. And we didn't start this journey, building a DeFi neobank. We actually started it building a credit union.
Okay.
Creating a credit union. For what reason? To solve the issue, we said, well, if because we are immigrants, we have to face that issue and get high interest on every single loan, we better have our own institution and serve ourselves a better way. That's how all this started. And through various iterations, changing business model to adapt to the very need of the market, that's how slowly and steadily we finally arrived at this DeFi banking model.
That's very interesting. So the other question it seems, we hear a lot about crypto. We hear, the DeFi, the social finance, the DAO. It seems very, I'll just say it seems very complicated. So is that a challenge that you think you'll face? So it seems like the market is there. So you have these individuals, but how many of them will look to go to DeFi? Or how many of them would know what DeFi is?
Yeah, that's a very good question. And I'll probably say something that it will be a little out of the box here. And that thing is, actually, DeFi has been the very first type of finance in the world ever. DeFi has been the very first type of finance in the world. Why do I say that? When you think about it, in the old days, where banks were not around, how do we get loans? Or how did we borrow money? It was from friends and family.
Mm-hmm.
So that was borrowing without any middlemen. We're borrowing directly from each other.
Mm-hmm.
And what is DeFi? DeFi is finance without the middleman. You get a loan from someone directly instead of going through the bank. Because what the bank does, it takes your money, keeps it, and then use that money to give a loan to someone else.
Mm-hmm.
Now you are getting a loan directly from the person, or now you are giving a loan directly to the person. That is DeFi at the core. Now it happens that currently there's a pretty interesting technology that we are calling blockchain, and everything that goes around blockchain that makes it even easier. That is all. Otherwise, DeFi has always been around and will always be around. And it's all friends and family lending at the end of the day. The technology to make it easy, better, in this modern time is what we are calling blockchain. So it's nothing very new to the world. It's been around forever. But how we want to do it right now is what we are calling, it is through the blockchain technology. And with Maoni, the way we are planning to serve the market is to make this easy to use, very easy to use, so people don't even feel the difference between just clicking on an app that is on their phone and using blockchain. So people don't even see the difference between I use my app, download the app, send money to someone, and using blockchain. They don't even know the underlying technology that is operating the platform. That's the type of platform we are building for people, for the market. Yeah.
Well, I have a question because on Wednesday I had he's a musical artist from Zimbabwe, Indigo Saint. And he released a song, which is an NFT. And the NFT, so you're able to buy parts of the song in the US. He's in Zimbabwe. He's able to get, receive through crypto and things, money from this. And he's not in the United States. So my question is this global or is this only in the United States? Could I say, well, I want to lend someone money in Nigeria or Kenya or somewhere else, or even vice versa? How does it work in that way?
That's a very good question. So blockchain technology can allow those cross-border transactions, be it lending transaction, money transfer transaction, and you name it. That's the very proper of blockchain technology. That is the bread and butter of blockchain technology. But however, Maoni, the way we are proceeding, the way we are getting to market is by first launching the US market. That's what we are launching first. And after our headway in the US market, then we are expanding internationally. That's just the way we intend to proceed. And because we are not our platform is not fully run on a blockchain technology, on a blockchain, but we are first, we are a very big portion of our transaction is being run through the regular Web2 platforms that everyone knows. So it's for that reason and so many other reasons that first and foremost, we are launching in the US, making our headways in the US market before expanding internationally. That is in our case, in the case of Mahoney.
Well, before I want to have one more question, I guess, on the model. I know with banking, they have loan loss reserves and things of that nature. So, I mean, is it possible? What if I take a loan and I just say, you know what, I'm not going to pay? What's gonna what recourse? What's going to happen?
That's a very good question. And that's the problem of every single lending business, every single banking business. And that's even why banks are using the credit system to find out who can be a better borrower. In our model, here's the way we are going about that, a non-reimbursement issue, in case people take loans and don't want to reimburse. We are solving that underlying issue through three main ways. The first way is through what we call reimbursement features. And so those are features that work with the borrower to make it easy for the borrower to reimburse the loan. How do we come up with those features? We literally did hundreds of focus group and interviews to understand why people don't reimburse their loans when they take it. It's not necessarily that they don't want to reimburse their loans. There are various reasons why they end up not reimbursing their loans. And so to every single one of those reasons, we came up with a feature to solve it. Those are what we are calling reimbursement features. Happy to get into the details of those reimbursement features later. The second way we are helping solve that underlying issue is by taking care of the collection in case a borrower defaults. What does that mean? That means, Professor, you give a loan to me, Gael. In case I don't reimburse your loan or I default on the loan, when it comes time for the payment and not pay you, Mahoney will go after me to collect the money for you. You don't have to go through the hassle of going after your friends, your family members, or people you don't know to get your money back. We take care of that for you. And we do it through a digital process and through a human collection agency. And then we go even further than that by allowing borrowers to pledge any digital asset they have as collateral for the loan they are getting from you. So that means when I'm getting a loan from you, I can pledge a stock that I have, a bond that I have, a cryptocurrency that I have, or an NFT that I have as a collateral for the loan. In case I don't pay you back, the collateral will be transferred to you and even converted into cash for you. So no matter what, your money is safe through our platform. And last but not least, we are going even further by allowing people and individual businesses to convert their most common physical asset or real world assets, which is probably their car, their house, you name it, into a digital asset, an NFT, and then use that NFT as collateral for the loan they are getting from you. All that to make it easy for people to collateralize their loans and to make it easy for the lender to lend through our platform. It makes the platform safe for both the lender and the borrower.
That's interesting because I know banks have the right to offset. So if you have money in one account and you owe, they can offset if you don't pay. So you say you can have the collateral, but and you'll physically collect. That seems very labor intensive. I guess this question is, how are you going to make money?
So I can probably address the question of being labor intensive. No, it's all digital. Most of the things we are doing are very digital. So it's all online and it's all automated. So we don't actually come into play and, move the needles around. But to your question, how do we make money? Very simply, four ways primarily we are making money. The platform is free for everyone and anyone. But there are some advanced features that you will pay a premium subscription to use. So the first way we are making money is through that subscription fee or those subscription fees. And that's only for premium features. But this digital bank is free for everyone to use every time and anytime. The second way is, at the end of the day, we are a decentralized platform. That means we are not taking your savings and we are not giving you loans. What we are doing is allow people to give loans to one another, allow people to give credit cards to one another, invest in one another. And all we do, yes, and for all those transactions, we make sure it runs smoothly. And we only take a small percentage as commission on those transactions. That means you give a loan to someone, we'll probably take about 1% commission on that loan. And when you charge interest on that loan that you are giving to the person, when comes the interest payment time, we take a small cut of that interest payment as well. So that's how we make money. First, subscription fees. Second, commissions. And of course, at the end of the day, we're a banking platform. What does that mean? That means you come to us, you open a bank account, we give you a debit card, and every time you swipe your debit card somewhere, we get a small percentage, a small fee called interchange fee. And as a digital bank, yes, and as a digital bank, there's so many other revenue avenues that we have. But again, our goal is to be fee-free for our customers or have the least fee possible for our customers, for our users. And then the last way we make money is what we are calling sponsoring fees. That means, Professor, you have 1 million in your account and you are willing to give loans to people in the DC area, people who have collateral, and that can, pledge their collateral as their asset as collateral for those loans. And then you want to advertise that loan in the DC area. We sponsor that for you. We do that advertisement for you in that area through our platform. That's our fourth revenue avenue.
So it sounds good. It's a great, and this will be my last question on this, and because I want to segue. We're getting close to the time, but it's a platform business from what I'm understanding. And you mentioned that with the collateral, how are you going to make, so you're looking to help individuals who do not have credit history. And it sounds like they may not have, okay, I'll say it this way. You may have more individuals on the platform without collateral than those with collateral. And then you may have individuals, like you gave the example of $1 million, someone that wants to come in, because this sounds like a great way to make money, but they may not want to risk. They want to lend money, but low risk. So they may want to focus only on individuals with collateral. So how do you really prevent kind of it goes into the haves and the have-nots. So now you'll have a group of people getting loans, but only the ones with collateral and with a lot of money to lend. And then the ones with no collateral aren't able to get loans, or it goes back to what we were saying. They pay high interest rates.
Yeah, so 3 points that I can address through this question. The first one, who are we serving? The second one, the matter of high interest rates. And probably the third one, primarily those two questions, if I get your questions very well. And the easiest way to answer this question is to think about the last time you gave a loan to someone. Have you ever given a loan to someone, Professor?
Yes, I've signed a note before.
Got you. And have you ever received a loan from someone, a friend, a family member, anyone?
Oh, do you mean, have I borrowed money from someone?
Someone, yeah.
Not a substantial amount. Not a substantial. No.
Not a substantial amount. Okay.
No.
The point I'm making here is all of us at one point in our life, whether we are high income or low income, middle income, high level professional or entry level professional, we get involved in that, not that business, but that need of giving a loan to a friend or family member or receiving a loan from a friend or family member. It happens all the time.
Right.
And the market, the data are saying that there are about 300 billion of loans that are issued from friends and families to their loved ones every year. Those are not necessarily long.
So
those are not necessarily.
I'm gonna kind of stop things here.
Those are not necessarily entry-level professionals.
And I think this is great. The discussion that we had at this time. So this was about 3 years ago. And in my opinion, it's still relevant. So I think the information, when we talk about DeFi, crypto, it is still very relevant, if not more relevant today, as things tend to maneuver even more when we talk about AI. So there's just a little bit left in the video. There's also other videos on this channel or interviews with CEO Gael Gadah, also Underdog Crypto, we're in there, and Indigo Saint. So all of the individuals that were mentioned, they're also there as well. So I'd love to hear your comments. If you made it this far, make sure you click the subscribe button. You want to make sure you get notifications for more videos. And then if you go to TikTok and follow me there, I also post short clips on TikTok as well. So yeah, this has been great. It's been a while since I've done a live stream. So normally I pre-record and then broadcast live streams on Sundays. So we're getting this week's video a little bit early. Next week, there'll be some more content around Sora. So we'll have some more videos, and then I will probably go back into spatial and start shifting back into the metaverse and NFT conversation. So it's been great. Appreciate everybody, and love to hear your comments.
In my veins, I've been driving this train, years in this lane, there's no stopping this flame, cause I came to the game and I changed it to play how I like, rearranged it to my own domain. Yeah, I got what it takes, made lots of mistakes, taking shots, skipping breaks, feeling lost, feeling great, popping off, singing straight, never stopped, never changed, all the squad here to play, and I've got something to say, yeah. I work hard each and every day,